How to invest during a recession. This is such a common question. It's a very popular topic across all financial. I look on Market Watch, I look at articles through our website here, and it's always like, oh, here's the best financial planners and how you should invest during a recession. Guys, investing is investing. You should have margin of safety. You should care about cash flow. You should care about balance sheet. You should care about future growth. How does that change during recession? It does not. Here's the example. Last year and a half, we've been making so many videos. And a year ago, you heard nobody talking about recession. And all I said was, I'm not predicting a recession, but we've gone a very long time without a recession, and we have very frothy valuations in the market. At some point, those frothy valuations have to become more reasonable. How does that happen? During recessions, during downtimes. Now, all of a sudden, we see rates getting spiked up from historically low rates. A mortgage a year and a half, 2 years ago was 2.65, 2.75%. Now it's well over 6%. These things cause problems. Now, what I don't understand is when things are their absolute best historically, people feel like it's going to continue going. And then when all of a sudden the signs of recession happen, when a year and a half ago, go look at the articles, all the financial experts, all the banks, they were saying, well, the likelihood of recession is very low. Now, all of a sudden, you literally have over 90% of banks and analysts saying recession is either here or we're going to guarantee to have one. It's going to be one of the worst ones ever. It boggles my mind. So that is my point. Think about that when you're looking at your investments. Look at the fickleness. Is that a word? Fickleness? Whatever it is. Look how fickle the banking industry and the analysts are based on recent results, as opposed to sitting there saying, here's where we stand today. What does that mean about the future? I'm not telling you make predictions, but what I'm trying to tell you to do is sit there and understand where we stand today and what that means about the future. But why does it matter? If you're going to make $1 of cash flow for the rest of your life, why does it matter if you're in a recession today or not a recession today or the market's going to be booming? The cash flow is the cash flow. Your projections are your projections. Your projections should have margin of safety. And that means factoring in recessions that will happen over the next 5, 10, 20 years. Recessions are a common occurrence in the US economy. And that's great. That's okay. Does it hurt people? Absolutely. But overall, everyone gets better after recessions. It's been happening for all recorded history that we know of recessions, the country gets better after them. Go look at the history of the stock market. Go look at the history of the U.S. economy. Go look and see where there were dips in GDP, where there were big surges in unemployment. We became better afterwards. So why should your investment criteria change? We promoted dollar cost averaging. Pick a low cost ETF like SPY or VOO, invest in the market. And what I always say, I sat there and I drew this graph. I said, this is the stock market's value over time, but this is how it actually goes versus price. And what do I always say? Invest all along the way. And guess what? During a lot of these times, there are recessions. During all these times, there are booms. And what do I say? Invest the exact same way. Dollar cost average. If you're a value investor and you're picking individual stocks, recessions are actually a time where you might be more aggressive because people's pessimism about the market is worse. I did a video recently where if you're a dollar cost average person, you invest more when the market is below its historical average, you're going to make even more money. So if anything, the way you should invest during a recession is be more aggressive. Go find the beaten down names, the companies that have great cash flow. Look at Peloton. A year and a half ago, Peloton was $180 a share. It was the future. It was amazing because everybody bought a Peloton during COVID. Now they're literally laying people off in order to, and I saw the article today, save the business. So I sat there and said, wait a second. I don't care if there's a recession or not. The Peloton problem started before the recession happened. The Peloton problem started when they surged because of COVID. And then when COVID went away, people went back to the gym. And all of a sudden the sales collapsed. That's understandable to me. I have a Peloton. And guess what? I stopped using the software. I don't pay the $20 a month for the software. I don't need it. I just need a really nice treadmill. This is the way you should be about all your investments at all times. Think about it and say, okay, what's the reason why this company is better or worse today than it was 5 years ago? If it's worse today than it was 5 years ago, merely because of the market, that's an opportunity for you. If something has shifted substantially in the business, be aware of that on the positive and the downside. That is how you should always be investing. Don't focus on, is it recession or not recession? You should always be saving a big chunk of your income. You should always be investing in dollar cost averaging. And if you want to buy individual stocks, you should always be buying stocks that make sense. And if they go lower and your thesis hasn't changed, buy more of it. I don't care if it's recession or anything like that. Just always, if anything, I will say, be more aggressive during downtimes. Be greedy when others are fearful. It's the most cliche thing in the world. I hear all the hypesters in the world talk about it, but they don't do it the right way. Being greedy when others are fearful, be greedy when things are like this. We're still here, guys. We still have a long way to go in this bear market. I don't know when it's going to end. I don't know how low it's going to go. All I know is based on where we stand today for valuations, the next 10 years are still not going to be great. You're going to have very low returns overall. And in those low returns, it's probably going to be a lot of this along the way. And that's okay. What you need to work on is your emotional ability to sit there and pull yourself out of all the negative news and say, okay, what's really happening here? Will company profits go down? Absolutely. Why? Because during recessions, profit margins decrease. In addition, a lot of companies have taken on a lot of debt in the last few years because rates were so low. As those debts get refinanced over the next 5, 10, 15 years, and the rates go up, it's going to decrease their profit margins. That's understandable. You don't need a recession or anything else in the world to just use logic and say, okay, this company took on $10 billion of debt at 3.75%. During normal times, that debt would be 7%. Okay, so at some point in the future, when they refinance this debt, they will probably have to pay a much higher interest rate. It doesn't take rocket science to figure that out. Just be logical. And that's why you're here watching this video. If you're part of our community and you watch this video and you've watched a lot of our videos, the great news for you is you understand money and investing better. You realize that when you buy a stock, you're buying a piece of a company. You're becoming a partner in the business. So you need to understand what drives that business. Whenever I look at companies, for example, last night I was spending some time on Southwest Airlines. I sat there and looked at it, and one of the big red flags to me was, in a positive way, Southwest Airlines hit $25 and $24 a share during COVID when the world was shutting down and we didn't know when it was going to open. It's currently at 31 or 32, and the revenue is back up to pre-COVID levels with more upside potential and profit. That was an indication to me, Paul, is the market just being more fearful than it should be. Now, does that mean Southwest is going to go up from here? No. Have I bought Southwest? No. Have I sold puts at lower prices? Yes. But I'm sitting there taking myself out of the situation saying this is the most profitable airline consistently. It didn't have 1 year of losses up until COVID. And in COVID time, it had 1 year of loss. So I look at that saying, okay, what's different here? That's what I want you to do. I bought Southwest. Luckily, I got purely lucky at $25.00 back in COVID time. And it skyrocketed to $50 and I sold it at $47. Okay, that's a great story. Pure luck on the $25 buy side. But then I sat there and said, and now it's at $31 and $32, even though revenue is at $21 billion back to pre-COVID levels. This is fear. And I'm okay with that because I can look at a company and say, they made $1 billion in the last 12 months. During their peak time, they made $3.5 billion. Okay, there's a lot of money being left on the table here that they'll get back. This is the way I want you to be. Use that kind of mindset during recessions. Don't change. Don't become more conservative during recessions. Become more aggressive as stock prices fall. That is a true investor, someone who doesn't run away when things look tough. Looking tough and being tough are very different things. But go back in history. Every recession ended up having a better economy for every country involved. Now, it all depends on valuations. Look at Japan. Japan in the late 80s, the Nikkei hit 40,000 or something. I don't know the exact numbers, and it still isn't back up there. That was 33 years ago. My brother was born in 89. The Nikkei has not beaten the price it was when my brother was born. That's an incredible stat. But guess what? Their valuations were way worse than we even hit in the 2000 dot-com bubble. And that's stuff to realize. So if you're new to this channel, you're watching this video, you need to watch 4 or 5 other videos and you will walk away understanding money and investing much better. And even if you don't agree with everything I'm saying, you're going to walk away saying, you know what? This guy makes sense. And I'm not going to agree with everything because guess what? I don't agree with everything that Warren Buffett and Charlie Munger say. How to buy stocks at a cheaper price. You will walk away much smarter. Thank you very much for your time.